Those are all compelling reasons, but the most compelling is going to be that the money is moving out of the traditional rails, right? The money that's coming out in stable coins is very rarely going back into the banks when it comes off chain. People are leaving money in these wallets. It's becoming a parallel economy. And we're going to see our entire set of financial services migrate onto this parallel set.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video banger. In today's video, this is going to be more of a motivational video breakdown, really talking about the historical moment in which we're living through right now in the digital asset landscape. As an individual who has been creating content in the crypto ecosystem for years now, I firmly believe that it is my responsibility to humble my audience and to remind you that no matter what comes next, whether the market continues to trail higher or whether we experience some trials and tribulations and some headwinds in the near future that creates a pullback, understanding where the long-term trajectory of this digital asset landscape is headed is of key importance right now, that you don't lose sight, you continue to do your research, you lock in, and you focus on what matters. So on Wednesday, the cryptocurrency ecosystem's total market capitalization neared $4.2 trillion after several high-cap altcoins recorded significant 24-hour gains, as shown by CoinGecko data. The total cryptocurrency market cap stood at $4.1 trillion, a new all-time high. Now, this is such a historical moment in the digital asset landscape. Now is not the time to be distracted by hype, nor is it the time to be complacent and just think that the market is going to go up for forever. So with that in mind, that is going to lead me over here to this post where I said, what you believe sets the boundaries of what you see as possible. Your mindset is the blueprint. Your behavior is the execution. It's not enough to take random action. You need belief backed with an accurate strategy, the kind that starts with intention, gathers the right information, and moves with calculated purpose. Anyone can be busy, but few are effective. Now's the time to believe, to learn, to plan, and to execute. That is how the transformational wealth happens from the inside out. The reason why I'm telling you guys this is because we right now, as retail investors, are beating the institutions, but that does not mean that the market is just going to continuously deliver us gains. And it would behoove you guys to understand market fundamentals, headwinds that could come about in the near term that could negatively affect the digital asset ecosystem in case they happen. So that way you don't get sidetracked and manipulated by fear tactics to sell out of your long-term positions by understanding where the trajectory of this digital asset landscape is headed. Now, don't take that from me. I want you guys to listen to an industry-leading expert from Franklin Templeton tell you guys two things. Number one, that retail has been beating the institutions. And so think about that in terms of the long-term trajectory of the space. When the institutional floodgates really open, what does that market cap look like for the total cryptocurrency ecosystem? Right? Considering that we just hit $4.18 trillion and hardly any institutions have fully onboarded into this space yet.
A little bit of a different point of view on this one. And I feel like it's kind of a cheat because you should really be answering this question. But I will do my best to answer for you. I would argue that retail has beaten institutional to this space already. That retail already understands the crypto markets far better than any institutional players understand them at this point. And that the capabilities and the functionality that the institutional financial services markets are going to need to develop are all coming now from the retail side. The gamification, the social interaction, the inclusion of short form video as forms of instruction, the ability to take actions on one's own that equate to what institutional players can do today, the ability to transfer assets peer-to-peer. These are all activities that retail are used to, and they operate with day to day in their everyday life. It's our institutional industry and it's our institutional rails that have kept us from keeping up with that level of innovation.
So if you've made it in the digital asset ecosystem thus far, understand what we've experienced up to this point has primarily been retail driven. And what we are set to experience over the coming 5 years is nothing compared to what we have experienced over the past 16.
Look, I think that we are going to see a massive relocation of the industry infrastructure, right? And it's going to happen so much faster than people anticipate. We like to say at Franklin Templeton, we're going to see more progress in the next 5 years than we've seen in the last 50. And that's simply because it is a superior set of rails, right? It offers you the ability to move away from this session-based 9 to 4, Monday through Friday activity to global 24/7. Right? It allows you to move away from even an enhanced T+1 settlement cycle to atomic settlement where assets and securities and assets and payments are exchanged instantaneously. It allows us to get rid of intermediaries that are toll takers and gatekeepers that add cost and fees. And it's going to allow us to reduce the amounts of collateral that we have to post to operate the system. Those are all compelling reasons, but the most compelling is going to be that the money is moving out of the traditional rails, right? The money that's coming out in stable coins is very rarely going back into the banks when it comes off chain. People are leaving money in these wallets. It's becoming a parallel economy. And we're going to see our entire set of financial services migrate onto this parallel set. In a sense, it's like what we saw with ETFs, to go back to the point you were making, is that like once it starts happening, it doesn't stop happening and it keeps spreading. And we've kind of passed that.
Now, the reason why I'm sharing this particular video breakdown is because here in the CYPRX Wealth 28 Club, we've been firm advocates of trying to teach and show people how to not have to sell your digital assets for fiat currency. And you just heard from Franklin Templeton, not only are the next 5 years going to be substantially more significant than the past 50, but also that all of traditional finance is moving on chain. So again, you have in the digital asset ecosystem amongst these influencers that are trying to get you guys to sell your digital assets for some high-end price instead of fixating on building strategies in the DeFi ecosystem to generate passive income to pay yourself so you never have to get out of the crypto ecosystem and get stuck and locked back into traditional finance, now knowing that all of TradFi is coming on chain, right? Every business, every organization, every institution is coming on chain over the coming years. You do not want to get caught misjudging what is about to happen because you think that the market is going to respect previous cycles that it respected over the past 16 years when it was primarily driven by retail.
We're in a really strange environment right now where 90% of all the money in crypto and blockchain is technically offshore. It's in sort of outside of the US and Europe and other sort of heavily regulated jurisdictions, even though 99% of the world assets are onshore in these regulated jurisdictions. We think this business is big, but we've actually just barely scraped the tiniest surface of what the long-term potential in this space is. And it would be misleading to think that the data we've seen so far is how the market's going to shape out as a whole.
Mm-hmm. So that leads me over here to this Bitcoin Suisse post where the chief executive officer and co-founder at Bitcoin Suisse said in a LinkedIn post, the growth potential of this asset class is substantial. We're not talking about marginal upside. We're talking about a generational shift in how value is generated, stored, and transferred. With that being said, sadly, many will miss out on this generational wealth transfer. Not because the opportunity was not there, but because they followed the wrong voices. They listened to those telling them to sell for fiat. They'll believe the ones calling DeFi a scam. They'll dismiss BSA-compliant blockchains as meme coin projects. This shift in how value is generated, stored, and transferred is not going to be easy to navigate, and that's something that you need to understand. So you're going to need to be plugged into a community that is aligned, not just with the right strategies, but with the right mindset. And that is who is going to survive between now and 2030. Looking back at this as a historical moment when the total cryptocurrency market cap was trading at 4.18 trillion, primarily driven by retail investors, fast forward 5 years from now when the institutional liquidity is unlocked. And that is coming. That is happening, and it is happening at a very rapid pace. To show you guys that we put out information that coexists with what institutions are telling you guys, in this post from a few days ago, I mentioned, they tell you that investing in crypto is too risky. But here's the truth. That's a psyop to keep you poor and stuck in traditional finance. Meanwhile, everything behind the scenes is moving on chain, and the smartest people in the room know it. The real risk is sitting on the sidelines while the greatest financial shift in history happens right in front of your eyes. Common sense says it all. The world is moving towards a digital economy, digital money on blockchain rails, tokenized assets, and 24/7 borderless payments. It's only a matter of time before everyone is using crypto. And when that happens, the early adopters will already be sitting on the other side of that wealth gap. Do not let fear keep you stuck in traditional finance. Let education prepare you for the opportunity. So that leads me over here to this BBVA document that was shared in our private CYPRX Discord with an exclusive interview from the head of digital assets at BBVA. Now, I just want to come down here and I want to read two pieces of this document. The first one here in the part of the interview where it says, on integrating crypto directly into BBVA's core banking application, our customers were already investing in crypto, just not with us. They're moving funds to external exchanges, and we saw an opportunity to meet that demand natively within the same application that they already use for fiat banking. It made strategic sense. For many banks, offering crypto used to feel too risky, reputationally, but the environment has shifted since. Mika brought clarity, a public understanding, and now the infrastructure has matured. We now see crypto as another asset class, and we believe that in 1 to 2 years, most banks, traditional and digital, will offer it in some shape or form. This is a huge confirmation from an organization that has valid credentials in this space. Now, if we scroll down here, it also says, our long-term goal isn't just to serve the BBVA. We're building infrastructure that can support the broader ecosystem. Just like we already offer traditional custody services to other institutions, we plan to do the same with crypto, making our infrastructure available to other banks and regulated players. This is a new business line for BBVA. We're treating it with the same standards and control as any other institutional product. The architecture is in place, and now we are scaling it. You do not want to be stuck on the opposite end of this liquidity wave when it happens. And believe me when I say that we are now entering into an era where people are going to overestimate the immediate short-term impact of this digital wealth transformation and underestimate the long-term.
It's going to be one of those cases where people underestimate the impact on, or overestimate the impact on the short term, but underestimate the impact on the long term.
So with all of that in mind, with the total cryptocurrency market cap making its mark in history, surpassing a new all-time high at $4.18 trillion, now is the time to be focused, no matter if we continue to go up from here or whether we see some headwinds in the near term that create a substantial pullback in the crypto ecosystem. It is the time to focus on blue chip digital assets, on projects that are building in the space with reputable organizations, laying the infrastructure to onboard large amounts of capital and money in the space from financial institutions. We now have confirmation from large organizations in the space that retail is front running the banks. You do not want to be a participant that is sidelined in the space, getting in after the financial institutions because you did not do your research. With that being said, do us a favor, smash that thumbs up button and subscribe. Make sure that you guys are focusing on what truly matters. And it's not only building your portfolio when the market presents discounted opportunities, but also building strategies and building yourself in the now, so that way you can last long term between now and 2030. As always, bringing you guys some of the realest information in the game. It's been such a blessing to reach these new heights with you guys in the total cryptocurrency market cap, and I'm super excited to see what happens in the years to come. I know that I will be here along for the ride to see what really unfolds in the digital asset ecosystem over the next 5 to 10 years. As always, be cognizant, continue to do your research out there, remain humble, be reactive and adaptive to ever-changing market conditions, understand the long-term trajectory of the space, and I will see you guys in the next video breakdown.